Big news of the week. Now we have investment banks like Goldman Sachs even calling for $2,000 gold.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, once again, it is that time of week for Dave Kranzler's gold and silver market update. And you see Dave over there looking sharp as always, getting ready to welcome him on in. Although, Dave, I'd like to let you know that today's episode is sponsored by Bluestone Resources, a permitted high-grade gold development project backed by one of the most successful mining families. As Dave, I know you are aware of Rob Keynes of Gold Silver Pros as a big conference coming up. He said that, and this is run by Jack Lundin, and Rob said, everything the Lundin family touches turns to gold. So anyway,
literally, right?
And today we'll be digging into why the price of gold is rising. So folks, please take a look at the end. We'll have a link to video where you can find out more about Bluestone and why it might be a great option for you to look into with the rising gold price. And with that said, Dave, a pleasure to have you on in here again. As always, my friend, how are you today, sir?
I'm getting ready to welcome in the weekend, to be honest with you. I've already worked harder this morning than I intended to.
Yeah.
But I will say, maybe I better take a look at Bluestone Resources for my mining stock journal.
I think that'd be a great idea. And I know you're familiar with the Lundin family, and I'd say that was one of the takeaways I've noticed as I've been going to the different shows and asked people what's the most important thing you look for. And I guess it's maybe similar to anything in life. If someone knows what they're doing, they have their own act together, they have experience, and we learn how to do something, usually a good formula. So I'll look forward to hearing what you have to write about Bluestone,
I don't know if
especially.
I'm going to. I need to look at it first.
Well, you can report back, especially because big news of the week. Now we have investment banks like Goldman Sachs even calling for $2,000 gold. Bank of America, I think it was last year, had a call for $3,000 gold. Perhaps Goldman has just been reading Investment Research Dynamics and picked up the Mining Stock Journal, which came out yesterday. But Dave, any thoughts on hearing some of the mainstream banks even talk about gold now?
Did you read your copy of the Mining Stock Journal yet? I've been told, I've been getting great feedback on this week's issue.
Well, I took a look through it yesterday to see what was in there. I'm going to give it a more thorough read today. We had a couple double headers this week, so Chris has had a lot of video editing, but I'm excited to go through it. I see you have a couple stocks that we've talked about before, so.
I see Chris likes to refer to himself in the third person.
Yes, when it's video editing, Chris talks about how sometimes it takes a lot of time to do, but we know the world needs Dave Kranzler's.
Does that mean it's an out-of-body experience?
Well, right before every Sunday, it sure is, because it's like I feel the world saying, yes, we must know what Dave is seeing in the gold market, and understandably so, Mr. 10,000 plus fan club rating on a weekly basis now. But what do you think about these banks even? I mean, it was for a while, like if you were in the mainstream and you talked about gold, you were just some sort of wingnut. And now, or actually, I'll start first today. I'll ask Chris the question. Chris, what do you think about Goldman's $2,000 target? And I would say, Chris, well, I mean, it's just, we're not in 2008, we're not in 2014 or 2016. It's like with everything going on now, it's hard. You had the elephant in the room for a while. Then he started like whacking people around with his trunk. Now he's peeing on everyone. It's like you can't. And I think there's almost like, what are people supposed to say in a counter argument against gold and silver?
Doesn't pay interest. Just sits there.
That's still better than negative yields, right?
You want to know what when I first several years that I was into this and I was talking to people about gold, they're like, what am I going to use that for? Can't spend it. Just sits there. It doesn't earn interest. Warren
Although,
Buffett said it's a pet rock.
in terms of deflated dollars, if you had not listened to Warren Buffett and you had bought gold in 1971 while Warren bought a bunch of stocks, you'd have a lot more purchasing power today.
You could have bought gold in early 2001 when it hit 250, and from that point to now, you've outperformed all three stock indices.
In fact, I was reading something in the last day or two where I guess they were extrapolating on that premise that basically you could just do that infinitely.
Well, now imagine how high the price of gold would be if the regulators restricted the open interest in paper gold on the COMEX to some percentage of the amount of gold that is reported to be in the COMEX, right? So I mean, the open interest now is what? I don't know, 550,000. So you're 55 million ounces of gold, of paper gold out. Okay. And I haven't looked at the warehouse stock report in a few days, but let's say there's 30 million ounces being reported in the COMEX,
Mm-hmm.
you know, and so maybe, I don't know how much of that is in the registered category, maybe 10 million or something. These are just off the top of my head. So you've got 10 million ounces that have been made available for delivery, but you've got 55 million, 10 million ounces of gold available for delivery, 55 million ounces of paper gold. Does that make sense? There's no other futures product in the world that besides silver that has that type of disconnect between the derivative open interest and the actual underlying of the physical. So imagine if the CFTC issued a decree that the paper gold open interest on the COMEX could not exceed 110 or 120% of the reported underlying physical available for delivery. That's kind of how it works in every other commodity product.
Well, it was
And
interesting.
the issue could be forced if the people who stand for delivery actually take delivery and then have the bars removed from the COMEX. That's now imagine where the price of gold would be. It would be probably 2 or 3 times higher at least than it is right now, at least maybe 5 times higher.
Well, all right there, Big Daddy. You're going to wander into that territory, so I'm going to set you up on this one. Let's say, forget there was no COMEX futures. Let's say in some bizarro world, we actually had things based on, I mean, hold on, folks. I don't want you to think I'm going off the reservation here, but let's just imagine for a second you had this strange fictional reality where prices were actually set by supply and demand, like whether people use the thing and not Steve Mnuchin's mouse. So, what do you think where would gold and silver be freely trading right now today? Do you think if you had no COMEX, no bank intervention, something where people were actually buying and selling based on
And taking delivery, physical delivery, like India and China do. Where do I think gold would be? I have no idea. All I can say is it would be many multiples above where it trades now, because the derivatives, the gold derivatives, were put in place specifically to deflect money flow from institutions away from the physical metal and into the paper products. And that's why GLD was created.
Yep.
You know, you ever notice how there's never an outside independent audit of the COMEX or the Federal Reserve or the LBMA or GLD? You know, well, I mean, Fort Knox, which, you know, you say that generically because most of the gold isn't in Fort Knox anymore anyway. If it is being safe kept somewhere, I remember in the early 2000s, the Fed announced that it was moving most of the gold out of Fort Knox and into what it called deep storage at storage facilities on West Point.
Yeah.
So I mean, and I found it interesting that when Germany they originally asked for, I think it was like 600 or 700 tons of gold to be repatriated, right? This was gold that Germany had moved over to the United States because they were worried about being attacked by Russia and that they didn't want Russia to get their gold. And so the U.S., stalled on that request. Apparently, a German delegation wanted to come over and inspect their gold, right? And the U.S.
They told them
reply
no.
was, well, it's in 9 different vaults. We can let you into one of the vaults, right?
And I think
You know this story. You know this history.
yeah, didn't they? I think the Fed ended up saying we'll give you 10% of the gold over the next 7
Well,
years. I
well,
remember.
what it was they had asked for, I don't know, maybe half of it back. I don't remember. It was something like 1,500 tons. I
And
don't
the
remember
bars
the
didn't
exact
match
numbers.
the serial
I think
number.
they asked for 600 or 700 tons of it, and the U.S. got them to agree to take 300 over 7 years. And the gold was actually returned, I think, in 3 or 4 years. But how does it possibly take that long? I mean, supposedly we just saw 180 tons of gold or something that shipped from Switzerland to the COMEX.
Well, I think
But
that's
whatever the number was, it's just like there's just so many lies, and the mainstream media just sits there and they don't question it. So anyway, to get back to the paper gold, there's communiques that go on between Henry Kissinger and his advisors, and they talk about this whole issue about how you can get them on the GATA website. They were not available for public viewing, but now they are. So gold futures weren't even around until 1974. It was 3 years after they closed the gold window. They realized they needed to come up with a derivative product that could help them manipulate the price of gold. So it's been going on it's been going on before Nixon closed the gold window, but I mean, it's intensified every year since the gold window was closed.
I hear you, and I
So
thought.
my point is, it's impossible to know where the price of gold would be if the derivatives were forbidden and transactions actually had to occur on a physical basis. But needless to say, it would be many, many multiples above where it is now.
Yeah, I'm in agreement there. Again, it was interesting. I remember back in 2011 in Jim Rickard's first book, he had that chart. And I mean, it's like I love how they stopped publishing M3. It's just like, well, this one's getting too big. We won't report that number anymore. But I mean, even if you take any of their money supply measures, I mean, the numbers start getting big really quick. And then it's like, well, if the gold isn't really there or if it's been leased out, then you're really tinkering with that fraction. Kind of fun to think about what silver might be priced at. But I mean, it's like all these things, I think they cumulatively add up to where, we're here, higher COVID numbers in the US. So if we have more COVID, we saw what happened to the gold and silver markets the first time. And like
That's not why I disagree. COVID isn't why the price of gold has gone up a lot since mid-March. The price of gold has gone up a lot since mid-March because the Fed has printed over $3 trillion in a very short period of time. And the gold went up because the market's saying, okay, this is just going to be round one for the Fed, and there's a lot more money printing coming. It's about dollar devaluation. The stupid virus that has nothing to do with devaluing the dollar.
I agree, although let's give the Fed some credit, Dave, because they were actually printing money by the billions and trillions even before Corona. I'm just saying the way
that's right. And the price of gold was rising. I mean, the price of gold has been going steadily higher since August 2018. You can look at a chart if you don't believe me. And that price smash that happened in early March, and that's exactly like the price smash that we saw in the summer of 2008. Right before Lehman collapsed and that massive, I mean, it's not like Lehman collapsed and then they decided, how to address it. They had been planning on that for quite some time. And clearly they were planning for this, I'm not saying the virus, but they were planning for some reason to have to print a lot of money because they started in September. And anyone who believes that those repo transactions were merely just 2-week repos and overnight repos is a complete idiot or just tragically naive, because that's not what they were. And remember, they grew very quickly. They grew in size and duration very quickly. So that's why the price of gold is going up. I mean, if Goldman wants to sit out there and masturbate our minds with the COVID story, that's fine, but that's propaganda. It's fake news.
All right. Well, I guess I can take it as a safe bet that you're not sending any resumes to work on the Goldman trading desk anytime soon. Although Dave is interesting.
Why would I want to go back to work for anyone?
I hear
Then
you.
I'd have to like become politically correct and structure the way I conduct my life.
That wouldn't sound healthy for the world. Although, Dave, speaking of gold, we see an 18 handle on gold this week. Finally broke through the 1800 level. So we're getting pretty close, not far off 1900 and the all-time high. Although I have a new hobby. We actually did a little technical analysis on the show. And by the time this is posted on Sunday morning, right now it's Friday, 11:30 Eastern time. But I find it interesting how often, there's wild volatility, then the chart just flat as a board. And with, what do we have? 5 hours?
So maybe Goldman would say that they're flattening the curve there, huh?
Well, we have 4.5 hours to go in Friday trading.
You didn't think that was funny?
Been practicing my courtesy laugh, as you can see there. I was making a brilliant market analysis here, Dave. I wasn't ready
Go
for
ahead.
you.
Let it fly. I mean, it looks like they flattened the curve.
I wish I had the parameters set up to sell vol, because I would love to sell that 1800 straddle right there. My forecast is that by the time folks are watching this on Sunday, we were already seeing it pin. Even in those JP Morgan confessions, it was interesting. One of the things that they confessed to was front-running barrier options. And basically, they talked about how they would sell options and then push it right to the strike. So I'm going to guess that, Dave, by the close of today's trading, that the gold price is pretty darn close to exactly where it is now. Are you able to sell vol in your fund? Could you just hammer a bid on a bunch of straddles there right now?
You're talking about put some calls on futures.
Yep.
Yeah, I probably could, but it's just it takes more time to figure out what you want to do and execute it than is worth it.
Yeah, well, I already know exactly what I'd love to do. We'll see silver again, wild volatility, then just sits there, and then when the market's the thinnest, nothing happens.
Just write calls on GLD or something.
Well, I may do that. So, Dave, I appreciate it as always. Great to have you back on the show. And before we wrap up, maybe give folks a little.
I thought you wanted to know what I thought about the banks now thinking gold's going to 2,000.
Well, that was like 15 or 20 minutes ago. But yeah, please.
I know, but we never answered that.
What do you think about the banks going?
Whenever Goldman or Morgan Stanley or JP Morgan says something, I'm always skeptical of it. More often than not, they're setting up the opposite way in their proprietary books. But I think in this case, these guys have to be realistic about where the price of gold's probably going to go. Otherwise, they're going to look like complete idiots. I remember for the longest time, the technical guru, commodities technical guru, I don't remember his name, at Goldman Sachs, had a perpetual $800 price target for the price of gold. And this is when, the price of gold was kind of ranged between, say, 1,100 and 1,800 or whatever. He always just had a perpetual $800 price target. It's just you might, if your technical model is this far dislocated from reality, I don't think the problem is with the market. The problem is with your model. So, you might want to revise how you devise your model. But at any rate, the point being, normally I would say that it's a contrarian indicator that all these banks are all of a sudden have, you know, somewhat bullish on gold. But in this time around, I think it's, you know, I think they're on the long side of the trade because it's so freaking obvious that, you know, being long the precious metal sectors is the biggest no-brainer trade of all time. I mean, people might think Tesla's a no-brainer trade, just it only goes up. But no, one of these days, there's going to be a poison dart thrown into the bubble that Elon Musk has blown, and we'll wake up and Tesla will be down 200 in pre-market, and it'll go lower from there. That day's coming, and I can't tell you when. I can't tell you where Tesla's stock price will be when that happens, but so getting long Tesla is not necessarily a no-brainer, and there's a lot of risk involved. Getting long gold and silver and mining stocks at this point, especially given their values relative to where they've been over the last 18 or 20 years, is a complete no-brainer trade. It's the biggest no-brainer trade I've seen since I've been doing the markets since 1985.
I disagree. In fact, I would say the biggest no-brainer is that you could get the mining stock journal or the short sellers journal, where as any of these developments evolve, you can stay posted just for $20 per journal per month. Although I hear the price might be going up. So if you're thinking about locking that in, might want to go to investmentresearchdynamics.com today, which can be found where, Dave? Where is it? In the you tell in the description field below. Come on, say it.
In the description field below.
Yeah, there we go. Dave, I think that might be what's happening is that Goldman, maybe they replaced notorious, and the new guy has been reading the mining stock journal. What you mentioned there actually reminded me of my favorite scene of The Big Short, where Michael Burry goes back into the office and the Goldman guy says, well, we've been reviewing your marks and have some updates for you. And then Michael Burry says, I think what you mean to say is that you've established a significant short position for yourself, and now you're going to adjust the marks. Great. We'll get something cool like that when we turn The Big Silver Short into a movie. Although, folks, with all this stuff happening and you see the gold price rising, again, today's episode was sponsored by Bluestone Resources. And to find out more about what they're doing, just click on the box that is coming your way now.